SoFi reported earnings for the second quarter of 2025 before the market opened on Tuesday, and there was a lot to like in the results. I'm going to go through everything you need to know today, but the big story for SoFi here is that they continue to leverage their technology and their platform. So they're selling more loans or originating loans on behalf of more investors. That's making the lending business less risky. The company looks less like a bank. Also, their financial services business, which is basically primarily a fee-based business, continues to grow like crazy, growing over 100%. So everything is going extremely well for SoFi. Management also said that the consumer seems to be holding up pretty well. Now, the market is not reacting very positively to some other earnings reports. So we'll see what happens with the market overall. And SoFi stock did kind of lag through the second half of the day today. But I thought these were really solid results. And if the stock does drop, it is one I would like to add a little bit more of. But let's dig into this. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's go to the press release first. And you can just see here, net revenue growth to a record of $855 million. Net income was $97 million. It's very tough for any company like SoFi to be profitable as they're growing as quickly as they are. But let's dig into some of the high-level results. You can see that adjusted EBITDA for the quarter, almost $250 million. So really solid. I'll get to their guidance because they did increase that as well. Earnings per share were 8 cents. And if we move over to the presentation here, the driver of these results is just continued growth in the number of members. So they report members and products. Members is just simply how many active users are there, people who have accounts. And then products is how many things are they adopting. So if you have a savings account with SoFi, and then you have an investing account, that would be 2 products with SoFi. So the year-over-year growth of the number of members, 55%. They added 846,000 members, and then year-over-year growth of products, 34%, added almost 1.3 million new products. Let's go to this platform because this is the way that they look at it. This is SoFi Plus. So you have the member, banking, credit card, investing, and loans. This is all the things that just kind of ties everything into one platform. But then they report it as a little bit wonky. So let's get to the lending business first, because I think this is the one that at least causes the most heartburn for a lot of investors, because this is where there is credit risk and traditional banking risk for SoFi. The lending business, adjusted net revenue, 32% year-over-year growth. You can see this growth is a little bit lumpy. They pulled back last year on some of their loans because they didn't want to have too much risk out there. They have gotten a little bit more aggressive recently, and management says that they'll basically get more aggressive if interest rates start to come down. Now, it's interesting that last year or 2 years ago, they were talking about falling interest rates being bad, being a sign that the economy is very weak. Right now, they're saying interest rates need to come down, even though there are signs that the economy is getting a little bit weaker. So a little bit kind of talking out of both sides of their mouth for management there. But I want to see, we're not seeing in the numbers that lending is going to be a bad segment just because if interest rates come down, and they would actually be able to sell some of their loans for maybe a better margin. But just keep an eye on that. If they do lower interest rates, what happens there? The lending originations, personal loans, this is going to be up really significantly this year. They're on a pace for about $25 billion worth of personal loans. Student loans kind of stuck in the mud. That's because interest rates are relatively high. Home loans, kind of the same thing, are going to be up again this year. And management did say in the conference call that they've got at least a little bit of momentum there. But it's not going to be a huge business. It's not going to be like it was in 2021, at least quite yet. Credit performance also continues to be solid. So this is going to be the more recent cohorts compared to 2017. They would not expect these to be underperforming loans. That's really the big takeaway for investors. Technology platform is the other big platform. This should be something that they're licensing. It's like a SaaS business to other companies. Another fee-based business. Continues to be a steady grower, 15% year over year. It is solidly contribution profitable, but not a big growth business. And this is one of those businesses where they continue to say, hey, we've got this coming down the pipeline. I don't necessarily know that this is going to be a big driver of the business. It's just been a little bit disappointing over the past couple of years. So keep an eye on this when they report results, but I wouldn't expect anything more than kind of this mid double digit or mid-teen kind of range for their revenue growth, at least for the foreseeable future. But where there is significantly more revenue growth is with financial services. So the light blue is the non-interest income which includes fee-based revenue that's generated primarily through the loan platform. So actually, if they have a loan on their loan platform that is originated by SoFi, but then it's originated on behalf of one of their investors. So Fortress would be an example of this. Their loan platform business, they're just going to get a fee from that. And that fee is actually going to fall into financial services. So it's a loan, so it sounds like a lending product, but actually the revenue falls into financial services. So as they grow that platform side, this is where you're going to see that growth is in financial services, not just in lending. Something to keep in mind as you look through the results. Referrals for loans. So this is, hey, we don't want to necessarily originate this one, but how about you look at one of our partners? Interchange and brokerage. This is going to be the brokerage business. So stock trading, cryptocurrencies, all that kind of stuff. And then interchange is credit cards and debit cards. So not a ton of credit risk in these businesses, but a bunch of fee-based revenues. You see that the revenue is just growing like crazy, up over 100% from a year ago. Contribution margin and profit also continue to get better and better, and you would expect this from a technology company where they're leveraging the technology that they have. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. But here was, I think, the big takeaway from the quarter. Guidance was above expectations for 2025. So this is their previous fiscal year 2025 guidance. $3.35 billion to $3.3 billion in revenue. They're now expecting that to be a little bit higher. Implies 30% growth instead of 24 to 27% growth. Adjusted EBITDA. Now those margins are expected to be a little bit higher. So you have higher revenue and you have higher adjusted EBITDA margins. Net income, same story there. They're expecting about $370 million in net income. So this is still an expensive stock. As I'm recording right now, the market cap for SoFi, about $23 billion. So it's hard to argue that this is a real value stock, especially in the banking industry. But typical banks don't have this kind of growth rate or don't have this kind of margin expansion. So that's the reason that SoFi is doing so well in the market, why the shares were up on Tuesday. So as we look through results, I don't think this is a great value stock today. I haven't bought shares of SoFi in a little while, but it's hard to argue with the company's performance right now. So the lending business continues to do really well. They continue to turn that into more of a fee-based business. That's what is going to end up on that financial services portion of the income statement and their reporting. So that financial services business, obviously growing like crazy. There's a ton of growth potential there as they add more products. And management talked a lot on the conference call about cryptocurrencies and the blockchain, getting more into those products, how they can make the business more efficient, make financial services in general more efficient. It'll be interesting to see what they come out with. They did talk about coming out with a stable coin relatively soon. I don't know that that's necessarily going to be a huge driver of revenue. That's something that Coinbase has done. They were a partner with the Center Consortium with the USDC stablecoin. That's one of the biggest stablecoins in the world. I don't know if SoFi having a stablecoin itself is necessarily going to move the needle for them. It hasn't for a lot of the other stablecoin issuers. But I do like they're pushing into these technology segments, and that's really where they can find differentiation. The tokenization, even of loans, was discussed. I think that's really interesting. Maybe SoFi doesn't want to have all these personal loans on their balance sheets, but would other investors take the yield that would come with those personal loans? So you could put that on the blockchain and somebody could invest $50 in somebody else's personal loan. That is a pretty compelling value proposition and use case for the blockchain. So we'll see. We're a long ways away from that actually being a revenue driver or a differentiator for SoFi. But that's the kind of potential use cases for the blockchain and cryptocurrencies that could continue their growth beyond the momentum they already have in the platform. So looking at the results, happy to be a shareholder. I like what I'm seeing. Like to see that guidance be increased. And Anthony Noto, the CEO, continues to be, I think, one of the most impressive executives out there. But let me know what you thought about the quarter in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.